Welcome to Finance This, Property That. My name's Dion Fernandes, and this podcast is for property enthusiasts, time-poor professionals, self-employed borrowers, and strategic investors looking for residential or commercial property who want more than just a low interest rate. They want a strategy and a team around them. Each week, I'll share strategies, structures, and lending moves that actually grow wealth, not just get you the loan. And also, I will help you surround yourself with information from professionals in their field. If you're here to build smart, not slow, you're in the right place. My vision is to empower financial legacies for generations. I am a mortgage planner and finance strategist, and I work with doctors, developers, business owners, and high-income earners to build serious property portfolios. So without further ado, let's get into today's episode. Hey everybody, welcome to this episode of Finance This, Property That. We are slowly but surely heading towards the end of the year. Lots of changes happening, but I thought this would be a really good time to talk about a couple of key things that are happening in the world of mortgage broking. So the topic I want to run through today is, should you go directly to your bank or use a mortgage broker? Well, that's a question based on what your actual goals are. But what I'm going to go through today are three things. What happens when your loan or your structure or what you're trying to do doesn't fit the bank's box? What is it actually like to be working with a strategic broker and what they actually do with you? And then also, what is it like to work with me and my team? So let's get into it. In my experience, the banks are always going to try and win your business. What you can see that in the market right now. They are aggressively pricing. They're also putting more staff on in their lending channels. Now that's fine. They're running their own businesses. However, when you're going to a bank, it is really noted that you are only getting one type of policy, one type of product, and they're not required to look after your best interests. What that means is they can only sell their one product. They can only give you that one policy. They will not go and compare loans against what's in the market. So the first point I want to make is the banks will usually say no if it doesn't actually fit their box. What does that mean? Like I just said, banks have one policy and they sell one product. They don't compare. Most of them try and avoid trust structures. Most of them don't do SMSF loans. Most of them don't do rooming houses. And a lot of them don't look at alternate servicing for self-employed clients. And you're also going to find even solid investors get knocked back if it's non-standard. So let's break that down piece by piece. Brokers are required by law to look at best interest duties when applying for a loan. What that means is we look and compare your loans and policies against the other lenders that are out there to ensure that we are lining your loans up to your requirements and objectives. You go to a bank, they don't do that. A lot of banks, and you've heard it in the media, well, one bank in particular has pulled out of lending under a trust structure. What does that mean? Well, that means that there's limited lenders that do trust lending. You really need to go and speak to a broker that actually understands trust lending, like myself, to be able to build out and create your portfolio that lasts. You also do need to seek advice when lending under a trust structure or any structure. Most of your major banks won't even do self-managed super fund loans or SMSF. This is another great tool that a broker like myself who does strategic lending and building up portfolios will use to grow wealth. Now, again, you still need the advice on there. Banks also don't do rooming houses very easily. Some banks do. It doesn't fall under their standard residential product. They do use commercial. You go to a commercial lender inside of the bank. They don't really understand debt structure and strategy. They only have one policy. They will not be able to do the deal in an efficient way to be able to sustain and grow your wealth. If you're self-employed, good luck. Banks Most of them will only have one type of policy, which is usually full doc or a director's loan or an NOA, notice of assessment type servicing. If you don't fit in any of those, hey, sorry, we can't help you. That's why a lot of investor clients that I deal with who are self-employed will never go directly to a bank. They'll come to a strategic broker like myself because if something's out of the box, a broker's going to be best positioned to actually help you because they've got, like myself, I've got over 50 different lenders that I can choose from. That means it's 50 different policies. It's never one size fits all. So you might be asking, well, what does a strategic broker like myself actually do for you? Well, I've mentioned it previously before. We select the lenders, or I select the lenders never on rate. You've heard me say it so many times. If you're trying to build a portfolio and you're chasing rate as your number one priority, just go directly to the bank. Like seriously, because rate stunts your growth. Policy will determine the rate because the policy will ultimately determine your borrowing capacity and where we go with the loan. So the lender selection is based on your structure, not just rates. Myself and my team look at modelling servicing through different methods and different policies. Therefore, it looks at future-proofing further borrowing and purchases down the track. And then we speak to your accountant to align it to your tax strategy. That's really important when you're trying to grow a portfolio, that we align it. We speak to the right advisors who can give you the advice, because I certainly can't give you tax advice or financial planning advice. I give you debt structure and strategy. Really simple. When we align the team together and everyone's on board, that's when the beauty and the growth happens. That brings us to the next point where it's, we don't just look at what you're trying to do now. We look at the whole scenario, or I look at the whole scenario. What are you looking at? What does it look like right now? Where do you want to be? And we work backwards from where you want to be so that we set the structures up correctly. And we're doing as minimal applications as possible to preserve your credit file. So really look at what the next best move is, or next two moves down the track, in order to plan it. And that way we can pull the trigger and get properties really quickly and grow the portfolio. So I've talked a little bit about what a strategic broker does and the difference between the banks, but what is it like to work with an award-winning team, which is my team? Well, firstly, when you first book an appointment with me, you get a dedicated 30 to 40 minutes and a discovery call. That's a really, really simple process where I just want to know more about you, what you're looking to do, understand the objectives, the end game, who's in your team, what are the challenges you're facing. Ultimately, I'm trying to find out whether I'm the right person for you. If I'm the right person for you, it's very simple. We'll make an appointment immediately straight after that. I'll get you to engage my services, and we will then have a dedicated strategy session, normally within about 7 to 10 business days. Now, 7 to 10 business days may sound really short. However, if we're all clear, capable and motivated, we're all on the same page and we want to move forward, it's really not that short of a time. I get all the information that I need. You actually get your own dedicated credit analyst. It'll either be Craig or Ferry, who are part of my team, depending on the complexity. You also get dedicated loan support and loan processing with the amazing team of Michelle, Sarah, Taylor, and now Subram, all onshore, wanting to help you process the applications, getting it to unconditional approval, and then also past settlement and post-settlement. Then you get the wonderful Anne, Dom, Mikey, Wilro, Dale, and also Martin. Sorry, Martin. Who are there, that's just assisting you guys, making sure the documents are right, so that when we go do our strategy session, we've already done a pre-submission research analysis. We've tried to do a pre-submission valuation. The policies are reviewed. The debt structure is set up correctly. We know when we're presenting you that strategy, we already know where we're going, exactly how we've done it. We're that good at our jobs, we don't really need pre-approvals. We'll only really do pre-approvals if it's part of a greater strategy and it's all going to the same lender. Sometimes we won't even use the same lender for all the lendings just to keep it a bit more diverse. Then I talked about our extended team. You also get post-settlement care as well. Your pricing, which is really important, it gets reviewed every 6 months. Anne does an amazing job. She reviews the whole book. She looks after 5 of us brokers, or 6 of us brokers now, and it's an amazing job. What that 6 months to review allows you to do as well, if something's changed in your situation, there's a link on that email. Let's book some time. Let's have a chat about what's going on and where we can move you forward, or whether we need to pause or whether we need to pivot. So there's some really, really key points there as to why would you work with a bank versus working with a broker. Also, on a side note, 76% of loans are actually written by mortgage brokers in Australia. So that goes to tell you the value and the service and the advice that you get from a broker versus going directly to bank is far greater than what people actually let on to be. Now, don't get me wrong, I've got some amazing friends that actually work in banks and they're great at their jobs. Again, even saying that, they still can only give you one loan, one type of loan product and one type of policy. Unfortunately, that's the nature of their game. However, if you are just chasing rate and you don't want to build a portfolio and you just have one loan and you just want to refinance the loan and that's what you want to do, maybe the bank may be the best place for you to go because you can deal directly. You might get a better deal. Maybe, probably not, because you shouldn't be getting a different interest rate than what a broker can get you, even though there's a few things happening out on the market, which is anti-competition in my eyes. But hey, I don't make those rules. But yeah, look, if you just have the one loan and that's all you're doing, you don't want to grow, yeah, maybe the bank's the best place. But if you want to grow and you want to diversify your portfolio and really do something great, then you need a strategic broker like myself to help you along. There's a lot in that, but hopefully you guys got a little bit out of that, bit of rationale behind my thinking as well. As always, the information on this podcast is very general in nature, doesn't take into consideration your personal circumstances or and is not seen as advice. If you want advice on your personal circumstances, find me on LinkedIn, Dion Fernandes. Find me on Instagram at Dion Finance Specialist. Podcast, website, finances, property, that. Come and let's just have a chat and let's talk about how we can move you forward. But until the next episode, see you later.